Good morning, everybody. This is Bob Iacchino from Path Trading Partners, along with Mike Arnold, my venerable colleague. I don't even know what venerable means. Quick path chat on McDonald's. MCD shares traded a bit lower overnight. They reported yesterday. In the earnings report, earnings per share rose 7.6% to $1.44, $1.44. Decline in revenue of $6.03 billion. Now that beat the consensus estimates from Thomson Reuters. It called for $141 and revenue of $5.99 billion. But despite the top and bottom line beat, revenue declined on a year-over-year basis, so shares suffered a little bit. I'm going to turn over to Mike real quick to let you know what he is seeing on the charts.
Thanks, Bob. If you don't already subscribe to our podcast, you should. We've mentioned McDonald's a couple times on the podcast. Here's the chart formation that we're looking at right now. We have a potential pretty big daily head and shoulders. You can also see it on the weekly chart, but here's your left shoulder, your head, your right shoulder, your rising neckline, which is the kind of head and shoulders we like to trade here at Path Trading. You can see the reaction yesterday. It moved down, sold off all the way down to below 120. And then let's see, what the low yesterday was 119.82, and then closed back up around 121.38. Pointing this out early, it could easily move there within a week or so, but it could, if it comes down here and we get a close below the neckline, we'll be out of the way of the daily rotation zone and of the 50-day exponential moving average. Our target area would be down here around the 114 to 112 mark. If you want to look at it on a weekly basis, because we like to make sure the rotation zone on the weekly basis is out of the way, you can see here is our longer exponential moving average. So we use a 21-day. If we get below this neckline, we'd also want to get a close below this exponential moving average, and that would trigger it. And you could see that this 114 to 112 area would be pretty much near the November lows set in November of last year. So watch for that. And then if we do get a further close down there in the weekly, it could easily fall back and test the $100 mark, but that's a long way off in the future. Just giving you guys a quick path chat update. Back to you, Bob.
Thanks, Mikey. Keep in mind, everybody, that most of McDonald's jump this year has been credited, at least by analysts that we've talked to, due to the all-day breakfast, the switch to all-day breakfast, which was obviously a big success. They can't go to all-day lunch. There's not going to be anyone going in for a double cheeseburger at 6 a.m. So they don't have another plan like that. It has to be some sort of innovation within the stores, which is difficult for a behemoth like McDonald's to do. So the fundamental story behind what Mike is showing you easily could explain a 5% decline, which is about what Mike is looking for, somewhere in the range of 5 to 7%. So keep an eye on MCD. We will talk to you guys soon.